Hi, I'm Bill Bronchick, and welcome to this special video training course. You're going to learn a lot of information that you can take action on right away to start investing in real estate. But before we get into the actual techniques, what I'd like to do is share with you sort of the big picture of real estate investing and go over some strategies, tips, and pitfalls that you'll come across when you start real estate investing. The first thing that I want you to understand is real estate is not get rich quick. No, real estate investing is a slow building process. Now, you can get broke quick if you don't know what you're doing, but you're not going to get rich overnight despite what you may have heard on late night television or at a seminar. So understand that this is a slow building process and you should try to do base hits, not always a home run on every deal. When you try to swing for the fences on every deal, you end up making mistakes that are not necessary, that are avoidable, and that can cost you a lot of money. Take educated risks in real estate, not blind ones. Real estate, like any business, does have some risks, but you can minimize those risks by getting educated. Now, unlike the stock market, where it doesn't appear to be any correlation between risk and education, because even the most educated people and the most experienced people in the stock market can't seem to figure out a consistent return without losing money, whereas real estate has a higher learning curve getting in. But the more you learn, the less risky it becomes. Now, in the book Outliers by Malcolm Gladwell, he talks about what's called the 10,000-hour rule. And what he suggests is that any great business person, athlete, actor, musician has spent 10,000 hours mastering their trade. And I don't think real estate is any different. Now, am I telling you you have to spend 10,000 hours learning before you can go out and buy a property? No, that's not what I'm saying. What I'm saying is that you should use and leverage the efforts of other people to overcome that 10,000 hours. Use me as a resource so you can get educated and so that you don't have to spend 10,000 hours figuring out what works and what doesn't work. I've already made the mistakes for you. You can learn from my knowledge, my experience, and the mistakes and successes that I've had along the way. Now, I feel that there are three keys to success in real estate investing. Number one is leverage. Number two is having a business plan. And number three is taking massive amounts of action in the direction of your plan. And I'm going to go through those in more detail, but I wanted to sort of give you again the big picture of what I see, what works and what doesn't work, not only for myself, but the thousands of people that I've trained to become financially independent through real estate investing. So let's go through each one of these. Number one, leverage. So in order to become wealthy in America, you used to be able to save because you could put money in a bank or in a CD or in bonds and earn a reasonable rate of return and then multiply what you have saved. But it's not possible mathematically to do that anymore. When you're earning 1% and inflation is 3, 4, maybe even 5%, depending whether you believe the numbers the government gives us, it's mathematically impossible to compound at 1% and become substantially wealthy. No, you have to actually leverage. That means going into debt, and that scares some people. But I'm here to tell you that debt is not good and debt is not bad. It's all what you do with it. If you go into debt to make money, to leverage, to become wealthy, then that's a smart use of debt. If you do it to go on a vacation or buy some toys, obviously that's not a good use of debt. But I want you to do is sort of erase out of your mind the preconceived notion that debt is somehow an evil or a bad thing. It's not. It's not good, it's not bad, it's how you use it. So let me give you an example. Let's say that you bought a house for $100,000. By the way, I like to use round numbers like 100,000. If you're from California, I understand there's no such thing. Well, if you're from Texas, some parts of Texas, you can buy a house for 50 grand, but I like to use round numbers like 100 so you'll understand the math. Okay, so $100,000 house, you buy it, and let's say that you immediately resell it for $110,000. Well, your profit thus is $10,000. And since you put up $100,000, you made $10,000 or a 10% return on your investment. Now that's not bad, but the problem is if you keep doing that, you're not going to earn the type of returns that we're looking for. So if you instead took that, let's say $100,000 and bought 4 properties, and on each one you put $25,000 down as a down payment, and then you borrowed or leveraged 75% or $75,000 on each property. So now you've got 4 properties worth $400,000 that you bought for $400,000. You put $25,000 down on each. You got a $75,000 loan. Now let's say you rented that property, or those properties more correctly, for a year or so, and then you sold those properties. And let's say each one you sold for a $10,000 markup, so you got $440,000. Now in the meantime, you've got debt payments on the $75,000, but you can offset that by renting the property, maybe even making some positive cash flow. But just for our example, let's say you break even all year long, and then sell the properties for $440 that you bought for $400. So we bought them for $400, we sold them for $440. What's our profit? Well, our profit is $40,000. So we only put up $100 and we made $40. What's the return? It's a whopping 40%. Now you understand the power of leverage. In order to become successful in real estate, you must leverage, that is, go wide. Put as little down as you can and buy as many properties as you can while we're at the right time in the market, and that is from the bottom on the way up. Different strategy when the market is falling, but generally if the market is flat or increasing, you want to go wide, that is, buy as many properties as you can, and do that by using leverage. Okay, so now you understand the importance of the concept of leverage. You know, it's as simple as this. You can try to save your way to millions by putting money into a savings account or a CD or a bond or the stock market. That's real tough to do. Or you can buy $1 million worth of real estate by borrowing $1 million and then let your tenants make you a millionaire by paying that debt off. It's a very simple choice. All right, so the second key to success is having a good business plan. Now, what I recommend you do is put this business plan in writing. That is, you have to carefully think this out, carefully analyze what your goals are for the next year, 3, 5, 10, and so forth, and put it into specific action-oriented plans that you can go ahead and take action on. Now, goals, you may have heard this acronym before, should be SMART. That is, specific. Saying I want to be rich or I want to retire is not specific. You have to come up with a dollar figure and by when. Measurable. So I want to be rich is not a measurement. I want to be retired is not a measurement. It's got to be a dollar figure. These goals should be action-oriented. That is, you can take action on it, not just think about it. They should be realistic, although you can shoot for the stars. You want to make sure that you're not having a goal of becoming a millionaire in the next 2 months. It's a slow process. And then, of course, you must have a timetable, because any goal without a timetable is just a pipe dream. All right? So we have a great business plan template in our premium member section, which I'll tell you about in a little bit. But either way, you use my form or you come up with your own. Be specific, review it often, revise it often, and make sure that you have goals that are SMART. And, of course, the last part of success in real estate, number 3, is action. Massive amounts of action. What can you do today, tomorrow, this week, this month, in order to put your plan into action? Because without action, this is all educational. This is all a theory. Without going out and making offers, you don't have any deals. Now, do you have to know everything there is to know about real estate before you can make an offer? No. The 10,000 hour rule is important, but it's not a prerequisite to going out and doing real estate. You should be able to, from these videos, get some basic concepts so you can put a plan together and then know in which direction to go to start immediately taking action. And some final thoughts. Number one, go through these videos several times. You will find information on here that you won't gather the first time. You'll have to hear it 2 or 3 times before you're going to get it. Number two, make sure you put all your ideas and thoughts in writing. Don't type it on a computer, put it in writing. There's something magical when the brain commands the hand to write a goal out on paper. And then, of course, take immediate action. Whatever you can do right now, today, right after watching these videos, in furtherance of your goals and your plan is going to be a step in the right direction. It's a cause set in motion. Ask yourself every day what you're doing. Is this going to help me buy a house? Is this going to help me reach my goals? Is this going to help me take control of my financial future? This is Bill Bronchick, and I hope you enjoy these videos.